There was a House bill voted upon 417-1, so there's one dissenting vote. It is not yet law. It is still subject to Senate approval, likely subject to changes at the Senate, which means it goes back to the House. But some of the things that were put in the bill, and a lot of these are likely to stay at this point, given the vote of 417-1. Loan maturity. If you have a loan, it's not forgivable. It'll have a minimum of 5 years to a max of 10 years. The covered period of 8 weeks that has been discussed a lot in the last 2 months. House is saying 24 weeks. Senate currently says 16. It'll probably fall somewhere between there. But if in doubt, spend your funds in 8 weeks if you're looking for the forgiveness. But likely this is going to be moved to either 16, 24 weeks, somewhere in there, very likely, which will make it a whole lot easier on certain aspects. But there's one aspect that it has changed, which I'll cover here shortly. There's still the rule about exemption for rehires, and there's actually, it's been extended. I won't read the details, but rehires could be, instead of June 30th, it can now be December 31st. I don't know how that's going to work out with lenders so well in the SBA if you got to submit the paperwork before then. Don't know how they're going to figure that one out. But they're saying rehires could be December 31st of 2020. The loan forgiveness will be determined without regard to proportional reduction in the number of full-time equivalent employees if the eligible recipient acted in good faith and is able to document a couple things. So potentially your FTEs don't count, potentially. Here's that rule that they put in. We'll call it, it's being called like the 60-40 cliff rule for sake of conversation. It used to be you could do a percentage. The goal was 75% must have been on wages to get 100% forgiveness, assuming you could spend the other 25%. Now they're saying, we'll give you up, like I said, up to 24 weeks, could be 16 weeks. You spend 60% of your money on payroll, and the other 40% on the other costs that have been discussed previously. You'll get 100% forgiveness if you get to the 60-40 rule. If you get 80% wages and 20%, it's 100% forgivable. But if your wages come in at 59% and you spend the other 41% plus on other costs, there will be no percentage proportional allocation. That means the full loan is due back. There's no percentage pro rata reduction. If you don't get the 60% in wages paid, you will have to pay back the full loan. That's the cliff. If you don't get there, you're not there. But if they extend this to 16, 24 weeks, most people will probably get over the 60% number. Not all, but a whole lot more will be covered. The other interesting thing that they put in here, you can potentially delay your payroll taxes, employer payroll taxes only, if the loan is forgiven, provided there is an exception to the delay of payment of employer taxes if the taxpayer had any indebtedness forgiven under code blah blah. Translation, potentially you could defer your employer taxes up to 2 years if it gets through. Necessity is still required to obtain the loan. That's still there. It now appears that retirement plan contributions may be counted in their entirety. For companies, however, sole props, independent contractors, and partners in a partnership may not be counted. It may now also be possible to pay rent that has been deferred from prior months or prepay rent. Put a question mark on that one. What's the definition of prepay rent? Is it 1 month? But they put that in there. Again, the full-time equivalent deal is kind of important. Let's say you need 25 full-time equivalent employees. You could, for a conversation, hire 50 employees. Call it in high school. They come in and work 5 hours a week. They count as 0.5. So they're all half employees. You just added 25 full-time equivalent employees to your account. So if you have issues with FTEs, a possibility is, if appropriate, and it makes sense, hire a bunch of part-time people. It will count. They're saying it's good. Even if it's under 20 hours, you still get a 0.5, even if it's only 5 hours. They're still not going to allow the owner to be counted in the numerator or denominator of the FTEs. You still have to run the numbers, make sure you meet the criteria, whatever the final rules turn out to be. Again, if you have an employee who declines to come back, you must report the rejection offer to the state unemployment office. They've put that in there. They're making this much more clear. You will apparently have to report the rejection, which is kind of what we've said before. Borrowers are not penalized for changes in employees' headcounts that are a result of employee actions and requests. I don't say much about that, but you could have someone who can't come into work, document it. There may be a good valid reason why. Lenders will have 60 days to review the loan forgiveness application once they start requesting those, whatever that due date is. And SBA will have 90 days to review the lender's decision on loan forgiveness. So you're looking at 5 months after the fact, potentially. Could be longer, but 150 days, that's going to be up to 5 months. Records, you must keep your records for 6 years for this. And again, they're reiterating, ineligible borrowers can cause the lender to lose their loan fees from the SBA. And all the lenders basically got about 4 or 5%. You do not have to pay for that. That was paid directly by the SBA. Make sure your money's not spent on the wrong things until after June 30th. Question mark. Try to spend it on the right things, make it simpler. There's no personal guarantees, but who signed the application? Was it accurate? Was the loan necessary to ongoing operations of the business? I've got some tax court cases on that. Well, not tax court cases, Supreme Court cases. There's also going to be, if companies go bankrupt, there's going to be preferential transfer issues for insolvent companies. So if that's an issue, it's a whole new ballgame. And there could be fraudulent transfers, breach of duty to creditors, state tax responsibilities. Rule of thumb is always pay your withholdings to the IRS to avoid the 100% penalty. Definition of what is necessary. What was written in the act says uncertainty of current economic conditions make necessary the loan request to support the ongoing operations of the eligible recipient. And it doesn't give much guidance after that or metrics as who applies, who does not apply. But what is the meaning of the word necessary? And way back in 1819, Chief Justice of the U.S. Supreme Court, John Marshall, issued a ruling on this. It was in McCullough versus the state. So those of your attorneys are going to look this up, I'm sure. That's fine. But he helped define what the word necessary meant. And this is in quotes, always import an absolute physical necessity so strong that one thing to which another may be termed necessary cannot exist without that other. The unquote, end of quote. The court concluded that it does not, and explained the word necessary, in quotes again, frequently imports no more than one thing is convenient or useful or essential to another. There was another case in 1933. The meaning of necessary was analyzed by the Supreme Court again in Welch versus Helvering. And that's where the taxpayer attempted to take a deduction of an expense that he claimed fell within the test of the Internal Revenue Code as being ordinary and necessary for business expenses. The court determined that expenses in the case were necessary because they were appropriate and helpful, but they were not ordinary. Appropriate and helpful is certainly a lower standard than essential. Since Welch, a number of cases have found that items many consider to be luxury items and services have qualified as reasonable and necessary business expenses. And it goes on from there. So kind of in summary on necessity, and most people, most companies are probably going to qualify based upon those two Supreme Court cases and the findings thereof in the ratings. A taxpayer claimed a deduction for ordinary and necessary expenses, and the court held that to deduct the expenses merely had to be appropriate and helpful. That was in Welch versus Helvering. In McCullough versus the state, the court held the word necessary generally imports no more than one thing is convenient or useful or essential to another. So for most of us, those are two good Supreme Court cases that support the word necessary in our favor. Anyway, that's the update. Again, this is not the law yet. It still has to go to the Senate. They'll be give and take, whether it's another week, 2 weeks, but they need to get moving along on it, obviously, because some of you have had the loan for mid-April, maybe sooner, some later, but time's kind of running. But if in doubt, pay now, get out of the way. But likely they're going to extend it to either a 16, 24-week period. But beware the 60-40 cliff now. Thanks. Bye.